Cloudflare stock plunged 16% on Friday after reporting Q1 earnings, but this wasn't a bad quarter. Revenue was up 30% year over year, and the company saw a record number of new customers join the platform, so is now a good time to buy the dip. At the latest price, Cloudflare has a market cap of $25 billion with $1.7 billion of cash and investments on its balance sheet and $1.3 billion of debt. Revenue at Cloudflare continues to grow at an impressive rate and now stands at $1.39 billion over the last 12 months. But despite being one of the fastest growing stocks on the market, the company is yet to produce a profit. Net income over the last 12 months is negative $181 million, and operating income is also negative. Stock-based compensation is significant at almost $300 million, but free cash flow has at least turned positive at $163 million. Cloudflare is a cybersecurity and content delivery network that helps underpin millions of websites. It's thought that 20% of web traffic flows through Cloudflare, and this is clearly a powerful business generating annualized revenue growth of 45% over the last 5 years. The company continues to acquire large customers and gross margins remain steady at around 77%. Expansion into apps and the sheer size of the cloud market means that Cloudflare likely has a lot more growth in the tank. Management thinks Cloudflare's addressable market is $164 billion and growing. The biggest problem for investors, however, is the valuation. Even after Friday's drop, the stock is still expensive at 18 times sales. While revenue increased 30% in the latest quarter, it's worth noting that operating expenses increased by the same amount, and those operating expenses were largely driven by sales and marketing costs, which accounts for 50% of revenue. Cloudflare will eventually have no trouble turning a profit. The bigger concern is the size of free cash flow right now. Cash from operations in the latest quarter was just $74 million, and the stock now trades at over 150 times free cash flow. To put that into perspective, if you bought Cloudflare today for $25 billion and free cash flow stayed at the same level, it would take you 150 years to get your money back. Of course, Cloudflare won't stand still. Sales will grow and the company eventually expects to get to a free cash flow margin of 25% or more. But even if Cloudflare grows revenue 20% a year and operates with a free cash flow margin starting today of 25%, it would take 15 years to see a return on investment. That high valuation is why I give Cloudflare stock a negative rating, but these are my personal opinions, not financial advice, and I hold no position in Cloudflare. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.